Good morning everybody, welcome back to the channel. Sorry for the delay, but I've tested positive for COVID, and so I've been isolating for the last 10 days. So out here, just not far from the back of my house, and really I just want to pick up on where we got to with our carbon credit story. So 3 weeks ago we reviewed an article in the Farmers Weekly, and they suggested some questions to ask your carbon trading platforms. So this video this week is supported by Soil Capital and Soil Heroes. They, as explained previously, they're helping with the production of the videos and answering the questions. So without further ado, let's start with question number 1. So, who owns the data and how will it be used? So let's start with Soil Capital. The data is owned by the farmer at all times and can be used in aggregated form by Soil Capital for analytical and other purposes, but it remains the property of the farmer. For Soil Heroes, the farmer's data remains his own, and Soil Heroes do not share this with any third party. They use the data to forecast the impact and inform the development of their future modelling, but it is not shared. On to question number 2. What length of contract are we talking about? In the case of carbon credits, fundamentally they're just an annual credit, hence an annual agreement. Now, contracts might tie you in to a trading relationship with your provider for longer, but the underlying carbon unit is an annual unit. So the contract is more to do with evidencing and underwriting your commitment than the carbon credit itself. Having said that, let's go to Soil Capital. They have no contract to sign, just terms and conditions. A farmer can exit the program at any time and for no reason, no charge. Well, you do forfeit the certificates held in the buffer, and they have to be destroyed to protect the integrity of the buyer's claim, but otherwise you're free to leave at any time. For Soil Heroes, slightly different. Now, Soil Heroes is more about the direct relationship between you and the partner, rather than the straight commodity trade that is the situation with Soil Capital. So as such, if you leave, you will break the partnering relationship between you and whoever's buying your credits. But this can again be done at any time. What practices and changes are expected during the contract? So let's start with Soil Capital. Practices: nothing is prescriptive. The choice is the farmer's to adapt and maintain practices that will improve his carbon balance. Key levers include your fertilisation strategy, cover cropping and land preparation, all of which can be added and amended by rotational design and agrochemical strategy. For Soil Heroes, slightly different. A farmer can select from 4 regenerative practices. They are appropriate to the particular circumstances on each farm, and these include minimum or zero tillage, planting of cover crops, application of organic amendments, and biodiversity lanes and margins. So slightly different focus. Soil Heroes actually have a guidebook of 20 regenerative practices, and over time they plan to implement more of these into their platform so that there's greater flexibility for farmers to adapt practices to their particular circumstances. Next, what is the length of contract and what are the commitments after the contract ends, and for how long do these commitments last? Fundamentally, a farmer can leave either company at any point. However, it would be better to ask, what is the acceptable length of commitment? So for Soil Capital, The programme commitments are split into two phases. The 5-year crediting period, during which carbon certificates are generated, and then a 10-year retention period. During each year of the crediting period, 20% of the credits generated are not sold but held in a buffer. And then for 10 years on a rolling basis, if there is no risk of the carbon being released from the soil during this second 10-year period, the certificates can be released and sold as per normal. For Soil Heroes, it's slightly different. Again, there is no commitment. After 10 years of farming a plot regeneratively, a farmer should recognise the benefits in terms of your improved soil function, better financial margins, but there is no contractual obligation after those 10 years. Are there upfront and continuing costs to pay? And this is quite an interesting one, and again where the two companies differ. So soil capital, the only cost you pay is £980 for each of the farm assessments that need to be performed. 1 at baseline when you start, and 5 annual reports during the crediting period. There are no other audit costs, and soil capital has no other products to sell. So farmers do need to provide soil analysis results at their expense, once at the beginning and once at the end of the 5-year period, to verify that the soil organic matter has improved. So for 100 hectares over 5 years, the costs work out at about £4,900. Now for Soil Heroes, there are 3 costs associated with the farmer. Firstly, a one-off £500 fee for joining their platform. Number 2, a timestamp, a zero cost of £500 per 30 hectares to be conducted at the start and then every 3 to 5 years. And finally, thirdly, an annual membership fee of £2.50 per hectare. So taking 100 hectares for example, over 5 years, for Soil Heroes this would work out at about £3,400. So because soil capital has a larger fixed fee, their fee structure will be suitable for a larger farm where that cost can be spread out across more hectares, while the annual membership fee of £2.50 per hectare for Soil Heroes will start to bite on these larger farms. I calculate that the crossover point is about 230 hectares, after which soil capital's fixed costs become cheaper. Having said that, this is not all about costs. The two platforms do offer significantly different focus points. So, how much will I get paid? The big question. So for soil capital, carbon certificates are generated and farmers are paid annually. Once the independent audit process has verified the data, soil capital has made a floor price commitment such that certificates won't be sold unless the farmer can be paid at least £23 per certificate, but there's no ceiling. The farmer always gets the same fixed percentage of the market price no matter how high it goes each year. So unlimited upside. For Soil Heroes, a farmer will be paid between £35 and £40 per tonne of carbon sequestered. If the farmers are planting biodiversity lanes and margins, as per their relationship with their partner, they will receive 25 to 30p per metre squared. A farmer cannot receive this biodiversity payment if they are already receiving funding from another government scheme. So you couldn't mix this with ELMS or CSS. The payment will be made at the end of the yearly growing cycle once the practices have been verified and the impact has been calculated. Who signs the contract in a case of a landlord-tenant relationship? This is a hot topic at the moment. The issue of land tenure at first appears to be an issue, fundamentally who owns the soil. However, reverting to the governing principle that carbon credits are rewards for annual behaviour, not long-term soil status, there's no such restriction on tenant involvement. So what does soil capital say? Tenants can always accept our terms and conditions, but if they have less than 5 years left on their lease, they need to talk to their landlord and get their approval. For soil heroes, the tenant can sign the agreement as long as they have the landlord's permission. So, tenant farmers, there's no excuse, both companies will accept you. Who will develop the carbon plan for the farm? Now, the definition of a carbon plan drew some queries from our two providers, so I asked the Farmers Weekly writer to clarify what he was asking for. And he wrote back and said, it was basically to make sure you know who was going to develop the plan to reduce carbon on your farm. Is it just down to the farmer, or does the company / organisation you're selling credits through help with this? Or indeed tell you what to do? The latter doesn't seem like it's happening at the moment, but it's worth asking before you sign the contract. So Soil Capital state, our farm assessments provide analysis and benchmarking that inform the development of a carbon plan, and we seek to provide valued adding input to existing local agronomic advisors that farmers already know and trust, who can go on to develop a carbon plan with our clients. Soil heroes say that they calculate carbon sequestration exclusively through soil management. Our carbon credits use Rothamsted's C model to measure the build-up of biomass in soils. We do not calculate greenhouse gas emissions elsewhere on the farm, so cannot provide a carbon plan. Finally, what cut do these scheme providers take? So Soil Capital's revenue is largely from the farm assessment fee. There is a commission taken on carbon certificate sales, the vast majority of which is used to cover the development of the commercialisation costs of our partner South Pole and the costs of the audit. For Soil Heroes, it's 17.5% on transactions between the company and the farmer. There you go, everybody. Thank you very much for listening. I have to say that going through this process, I am really quite reassured by the answers I've received. I don't feel in any way that this is the scary new platform that it's made out to be. I think it offers a real benefit to regenerative farmers, and I hope you stay with me on my journey and the announcement of which platforms we're going for and why and the reasons behind it. So more to follow. Please give us a thumbs up, subscribe to the channel. See you next time. Merry Christmas.